As you all know, I'm James Summers.
Yes, sir.
Thank you very much for coming to the center. This is one of those opportunities that we really want to try to help businesses in the community. So one of the key things that we had said, we had wanted to talk about access to information and access to capital and those sorts of things. So this evening, this is the first of one of our, what we plan to have as informative workshops for businesses to be able to understand actually what are some of the best practices in terms of working with their businesses and how to actually set things up, particularly who to partner with and how those relationships should look. So we are absolutely blessed to have representatives from the finest banking institutions in the entire area. There you go. The way this is going to work is going to be very, very simple, okay? I'm going to give everyone an opportunity to introduce yourselves, your businesses, and your teams, people who are present here, okay? Then I'm going to come back and I'm just going to ask a few very simple questions to be able to try to stimulate conversation. I'll ask the question. Our experts will address them, right? Address the information and share it. But please feel free to turn around and ask additional follow-up questions at any particular time. All right, is our table breaking down?
Just the rules fell out.
Uh-oh, okay. So we want this to be as informal as possible, as conversational as possible, as informative for you as possible. So you think about things, the questions that pop up that are relevant to you and your business, and please feel free to ask them at any time. Make sense?
Yes, sir.
Okay. John, if you will start.
Hello, everybody. John Wingfield. I'm from Centier Bank. So Centier Bank is newer to this area. We've been around for about 4 or 5 years, but we're not new to banking. We've been around since 1895. Started in Northwest Indiana in the Griffith-Whiting area, and have since then spread throughout the state. One of Centier's pledges is that we're not for sale. Anybody who has recently gone through the Wells Fargo exit from this area knows how difficult that is when you're used to your bank and then all of a sudden they say, oh, now you're a client of another bank. So that's one of our pledges, we're not for sale. And one of our mottos is, that's my bank. And the reason why people love to say that's my bank is because of our dedication to customer service and our commitment to the community. So when you are a Centier client, you're proud to say that's my bank. I've been a South Bend resident most of my life. I grew up in South Bend, went to Clay Middle, Clay High, so I know the community. I work in the JMS, downtown South Bend, and being a community kid from a community bank, I'm here to help in any way I can.
Awesome.
And, my name is Nick Matthews. I'm a Director of Commercial Lending at Notre Dame Federal Credit Union. Notre Dame has been in this area for a little over 75 years. However, commercial lending is relatively new to us. I've been with the institution about 3 years, and really kind of jump-started the commercial lending department there. So I've got about 13 years in commercial lending background. I grew up in Grand Rapids, Michigan, but I've been in the South Bend area for about the last 10 years. Spent the first half of my career working as a credit analyst, so taking all of the financial information from businesses and putting those into a form where we can make loan decisions based off of those. So I've had a lot of experience working directly with the numbers, which is nice when you're working with a business banker. Sometimes if they have that sort of a background, they can kind of give you a pretty good idea right off the bat if you need to tweak some things or if this will work or that won't work. But yeah, Notre Dame is a great institution. I love it there. We have a lot of freedom and flexibility. We have very quick loan turnaround times. That's probably our biggest advantage. Every decision we make is made right at our corporate office, just north side of campus at Notre Dame. And I'm happy to be here to answer any questions that you guys have.
Thank you. Nick?
My name is Kenny Burry. I am with Teachers Credit Union, also a credit union. One thing that Nick didn't mention, that credit unions are owned by the members versus stockholders and private individuals, such as the banks. No, I mean, not a big difference as far as that concerned, but just that's the difference. People always ask us, what's the difference between us and a bank? And so that's kind of the difference between us and a bank. I've been in commercial banking since about 2005. Spent some time with KeyBank in the retail side of things, doing consumer loans and banking accounts and those type of things. TCU is the largest credit union in Indiana, one of the largest credit unions in the country, actually. So what we can do from a loan standpoint is pretty dynamic. We have a small business program that we can help somebody that has a $25,000 commercial loan need up to a $30 million commercial loan need. So we have a pretty wide range of things we do, and I work on all of them. Again, you know, TCU has been in the South Bend community. We started here by a couple teachers, and still to this day there are members that started from the get-go with us right over here on Williams Street back in the day. So proud to be with the Credit.
Excellent. My name is Mike Plensler. I lead the business banking team in Northern Indiana and Southwest Michigan. I live here in this area in Granger, and so does my team that I have with me today. So starting in the back right, if you can raise your hand, Santiago Rodriguez is one of our business bankers here in town. Kim Geiger down on the end, Venus Miles, Nick Carlson, and we have a handful of other branch managers that need to run the offices, so we didn't bring all them with us. But for a lot of folks who don't know a whole lot about PNC, what I want to start off with is that, you know, everybody's on that kind of that side. I don't want to black you guys out, but I want to be able to see people. So PNC is, by different measures, one of those big banks. And so that goes with that kind of a, what the media likes to go ahead and play on it and some of the, from a competitive standpoint, but we do care. We live here, we buy groceries here, we pay taxes here. I've got some of my people here. So from that standpoint, I want to make sure that y'all understand that we are a local bank and that we do business here. And well, the benefit that we really bring from the banking standpoint, both personal and for your business, is the products that can really be easily accessible. And I guess that's what we've got in the folders there. Maybe we'll have a chance to go through those when we have a minute with some of the Q&A. But from the ability to bank with ease is what we've tried to focus on the most. So everybody has a smartphone of some degree, or a tablet, or access to a computer, and being able to do your banking any hour of the day is what is a big plus for us. We've invested heavily to make sure that those smartphones and everything else are able to get things done, and we have branches conveniently located to go ahead and have one-on-one conversations. So we'll talk about how, there you go, I like that right there. Got the old mobile banking app right on his phone. In any case, we'll get into more of the details. We'd rather, instead, just make it a standing commercial here in the corner. But go ahead and have some more conversation about it. We'll just kind of bounce some ideas around.
Yeah.
Holder, there you go. Give you one of those. So with that,
Okay. So first question I'm asking is, as a small business owner, what should I be looking for in my business bank? Who start off?
So I think one of the first things you want to look for is somebody that's going to give you advice. You know, not just be sort of an order taker, but somebody that's going to sit down with you and not just tell you what you want to hear, but actually tell you what you need to hear sometimes.
That's right.
Because starting a business is not easy. It's you're risking your livelihood, you're risking your home, your car, a lot of these cases. So you want somebody that's going to help you understand those risks, and not just try to, you know, push a loan through without really kind of giving you the feedback that you really need. You want them to be a partner more so than just, you know, somebody that's going to take, okay, you have a loan request, let me run it down the flagpole, and, you know, it may or may not work. You know, my opinion, you guys.
I'm happy to go next on that. So in your folders is a perfect segue. If you all open up your PNC folder, on the right-hand side, what you'll find is a single sheet of paper. And this is our commitment to our business owners. It's called, we refer to it as the conversation agenda. And what you'll see on that breakdown there is we do recognize, obviously, who we're meeting with. And today we made sure to reference Mr. Summers and Pastor Blake with today's date and all. But we try to make sure that we're very organized and we're very sensitive to your time. And it's a very needs-based conversation. We try to have the agenda in your hands ahead of time, either by email or we bring it to our meetings. And we just basically walk through what's more important to you. You'll notice there's only one main bullet about PNC Bank and a couple of sub-bullets there, and then everything else on the sheet's about the business owner. We don't have to cover everything, but our focus is kind of what we're talking about here as far as very needs-based, focused on you. Advice. One of the elements toward the bottom there around personal banking, we even tie that into our business conversations. So making sure that, much like earlier today when we were with another business owner, and then even Santiago and I here on Friday afternoon here at the center, we focused on how they're asking questions about how did you organize your business? Is it a sole proprietorship? Is it an LLC? Is it some of these other? And what about your estate plan? Everyone needs to have certain documents, and so we walked through that. Like will, everyone needs to have a trust. If you own anything, you got to have a trust. And 2 powers of attorney. One for business purposes, for especially if you have a partner, a spouse, what have you. But then the other one is the healthcare power of attorney, which a lot of folks just assume that, well, I'm married or my mom or so-and-so can take care of it. Not by law. And so we make sure to bring that up in conversations pretty regularly about even a healthcare power of attorney. Just make sure you as a business owner, while you're thinking about it, you're sitting with the banker, let's also talk about the personal side with that business side. Okay? So many times you can't tell the difference, right? It's all one. You are the business, so you got to make sure, the way we look at it is make sure we're talking about that too.
I kind of echo what both those guys have said. You know, sometimes we have hard conversations. I mean, a lot of times I think we're all approached with a business that has an idea of, well, I want to buy this machine, I want to buy that, but financially it really doesn't make sense. Matter of fact, I was just at a business yesterday and really wanted to know, if I'm going to spend $100,000 for this piece of equipment, how long is it going to take me to recoup the funds I put into this piece of equipment? And sometimes those are hard conversations because I have a small business myself and I get excited about equipment. You know what I mean? I'm like, well, I would love to have this one, but does it really make financial sense to do that? And so those are sometimes some of the hard conversations that we have to have as bankers to say, hey, this really doesn't make a lot of sense right now. Renting versus buying a facility, building right now. Sometimes for a business it may make sense to rent versus buy. So those are something you want to look for in your banker to make sure they're being honest and giving you, again, advice to help you along the way.
And me personally, I believe it's the relationship aspect. You really want to find a banker that you connect with and that can build that quality relationship with you, and not just to understand your business, but to know you personally and know about your family and help mitigate risk overall. And kind of like what Mike was talking about, you really want to have somebody who understands the community, understands you, and understands how your business impacts the community, and then developing a network around that person as well. And all of us business bankers, we have a lot of different resources when it comes to accountants and lawyers and Jane Summers and the SCORE group. So you really want to pick a business banker that has that core network and connection in the community, because we want to make sure that you're set up for success in all aspects of your business, not just business banking. So again, it goes back to that relationship with that lender, and you want to make sure that you choose the right one that understands you and what your needs are.
Well said.
Well said. Any questions from the audience? Yeah.
Thank you all for coming today. I have 2 questions. My first question is, for each of you, what repository do you use? Early warning systems, check systems, Verifax?
We use check systems as far as
What bank are you with?
TCU.
We do as well.
I think that's pretty standard.
Yeah, send to your bank as well, check system.
Check systems.
I know some of you use early warning systems. Everybody use check systems?
We do.
We use early warning systems.
So Nick, Venus, and both you guys were kind of waving at me. Go ahead.
PNC uses early warning systems.
Okay. And my second question is, which of you offer business credit lines without a personal guarantee?
It depends, I would say. I'd probably say for all of us, actually. So it would really depend on the situation from a personal guarantee, but when we're looking at, for the most part, obviously jump in, guys. I mean, it's your business. If you're running that business, and if you don't want to guarantee it, why should we do it alone? It's kind of why I'm thinking about it. I mean, you're in charge of the day-to-day. So we just want to be able to go ahead and help you grow, manage risk, and be able to go ahead and and know that everyone's all in on repaying those dollars that are out there. I don't know.
Yeah.
Is that fair?
I think it's the same with us. I mean, we can do a certain amount unsecured, but those are pretty rare as far as we.
May I rebuttal? It sounds good unless you're talking about like a corporation. I mean, it's your business if you won't personally guarantee it. I mean, is that your policy for corporations that the CEO has to?
Oh,
Absolutely. Every loan we do, there's a personal guarantee attached to it.
Probably the bigger the loan, the more so we have to go.
Yes, it's pretty stringent.
And that's pretty much the way the Fed has inspected the folks that audit all of our financial institutions. A little bit different all the way across the front of the room here, but the way that it's inspected at this point, it's pretty much, why don't you have a guarantee? You know, it's how the Feds look at it, or the state authorities, or what have you. Fair statement?
Yeah, absolutely.
Yeah.
Did you have a comment?
Yeah. Couple of them. First of all, I appreciate you guys taking the time. Most important for me is being honest, you know, being realistic, because that's really what it comes down to. You know, I appreciate you not blowing smoke up, you know what I mean? And you kind of consistent. I think it's Mike, with what First Source said, the bank that you go to, they want you to have some skin in the game. You know, and I'm hearing the consistency, because that's what I want to know is what do I need to do realistically. I'm in place. I have an account set up, a business account set up with Woodford. They're not here, and they denied me a loan. You know, what I'm looking for is the ability to finance a job if I get it, because once you get it, you commit it. I'm not in a position to finance it, but I'm hearing, is it true that there's being unsecured is not possible? Just starting out, because that's where I'm at. Pastor, he mentioned something a couple of weeks ago about getting investors. What do you have? Do you all have a position where somebody can co-sign for you if they don't have, or somebody is willing to invest if you don't have the immediate funds? Because that's where I'm at. I'm ready to take a job, but if I take it, and I have to be able to finance it. Do you all have options for that? For people that's just starting out. And if you get the contract, you have to finance it.
Sure.
I see that on TCU.
That's a pretty, I mean, I think the position you're in is a pretty common one that we see quite often with startup businesses. It's sort of, you know, chicken and egg kind of a conversation, but I mean, it's always an option to bring another guarantor or a co-signer if somebody's willing to stand behind it, and, you know, especially if they have any personal assets they can pledge. When there's no collateral at all and it's a startup entity, those are always going to be tough conversations, because the bank, you know, startup businesses are notoriously risky to lend to. A lot of them don't succeed.
Yeah.
And so if there's no, you know, secondary kind of repayment source behind there, it just makes it more difficult. So I think having an investor or an additional guarantor who's, you know, financially strong, has some assets they can put towards the project you're working on and are willing to do it.
Just willing to invest in you.
I think that definitely is something that, I know we would consider that. I don't speak for everybody else here, but, yeah.
But no unsecured loans on the startup. That's pretty much.
They don't happen very often, no.
Right.
And if they do, they're
And see, we need to know this,
Right.
you know, so I can pursue other, you know, whatever other avenues that's how I go.
So there's a couple things to think about when you're looking for a
And
loan.
I appreciate you being honest.
Absolutely. One thing is collateral. You usually want to have your loan properly collateralized when you're talking to the bank, and then your repayment source, and then the person you're giving the loan to and what the business is about. So we at Centir, we want to make sure it's collateralized. We want to make sure then that, yeah, because a lot of people say, I've got collateral for a loan, why can't I qualify for a loan? But then we have to look at the business and how are you going to pay that loan back? Because we're not a predatory bank.
Right.
We don't want to just, when you close up shop, and we just take all your property and say,
Right.
now, you know, you go do your thing, we've got all your property. We don't want that.
Right.
We're not landlords. We don't want a bunch of properties all around town. We want to make sure that you're set up for success. So we want to look at that business plan, and we want to look at your revenue and cash flow analysis, and make sure that you can easily repay this loan without it being a detriment to you personally, that you can still live and pay your bills and your business is being successful. So those are some very important things to look at when you're thinking about a loan. Is it collateralized, and what does my revenue stream look like? So when you're looking at that business plan, you're sitting down with James or the score group to develop that business plan, get some projections. And if you have already bid on something and you won that, great, get that into that business plan and say, hey,
Right.
this is what I'm going to get paid.
Right.
So actually, we can look at that and we can then collateralize some of that. All right, we already know that you have income coming in, and you can pay the loan back off that way as well.
Sounds good.
What, if I may, just real quick to add on, then we'll go on from a conversation, kind of building what John's saying and many of us. So you look toward the bottom of that one agenda that I passed that's in your folder, and when we ask the questions about, tell us about your relationship with your customers, with your vendors, right? You know, what do you do with, how do you manage your cash? What kind of an accounting system, those kinds of things. Those are the kinds of things that all of us in one way, shape, or form or another start getting into those kind of needs-based questions. So we'll just go through the dialogue. We'll come up with what you're planning. And sir, to your point, I mean, it could be something where you really don't need a loan. It's just the timing of the cash flows. I don't know about the job, but I'm just saying for an example, a lot of folks think that they need to have a loan.
Right.
Maybe not. Because of the timing of the payments and some other things and how fast you can collect it.
Yeah.
I mean, that's what
It's
pays
not
the
a
bills,
loan,
right?
yeah, it don't have to be a loan.
Exactly. So being able to use something besides the checking account to go ahead and, collect the money when you get a hard copy check. There's a lot of capabilities, and we've got some of those things in the staple piece that's in the right-hand pocket as well, that we might get to at a later point, or maybe with some of our folks that are with the PNC team.
Is that the same as having a credit line?
In this case, what I'm talking about is the technology to go ahead and bill by email and do some other contract items depending on your job, whatever your deal is with your customer. But we'll talk through that and give you some ideas on that too. Yes, ma'am.
What is the minimum commercial loan that each of you, I know one said 25,000. What's the other's minimum commercial loan?
I mean, from us, it's 10,000.
10,000?
Yeah, I'm not sure we have a specific minimum at Notre Dame, but, typically we're not going to see requests much smaller than 10,000. Typically, if somebody's working with a business loan, unless it's a small credit card need, it's generally going to be 10,000 or more.
Same with us, 10,000.
Is it anything below that number? Is it generally something we can use with a credit card or something? But what I was referring to is some cash management services that aren't just for big corporations, to your point down there, sir. I mean, there's a lot of things that a financial institution can offer now from a technology standpoint, and fraud protected, that you can go ahead and be able to collect money, pay your bills that way as well, kind of like the old online banking. I mean, online banking is kind of old technology, but having access to it, that's going to be the critical point. If you have a smartphone, most of us can go ahead and set that up for you so you can see all the balances, bank at night. One of the institutions is not here, bank with bedhead or something like that, was a billboard I saw. Whatever. But it was the Mr. Summers knows what I'm talking about. But in any case, there's a lot of ways to move money around, and you may not have to, depending on when you have to pay your vendor, when you get the money from the customer, you may not have to have a loan.
Right, I agree.
So
You got a credit line.
So we do have a product at Centir. It's called a quick line of credit. And that's if you're a Centir client for 6 months or longer, then you can qualify for this quick line. And that's $1,500 or $1,500 up to $50,000 is what that quick line is. And that's a higher interest rate. And it's more like a credit card. It's that 15% interest rate as opposed to a loan, which is going to be much lower than that. But it's for quick cash. And that's usually a turnaround time. You can apply for that online, and a turnaround time of 48 hours. You can get that cash deposit in your account.
I think we probably all have access to something like that.
Now, for me, what would, I guess, with all of you guys, the minimum credit score?
It's not so much about credit score. So for us, and I'm sure all the institutions follow the same guidelines, we have what we call the SBSS score. And what happens is it looks at a lot of different things. It looks at your tax returns, your personal credit score, the amount of money you're borrowing, and it puts it all into a computer system, and then it spits out a number. And that's the number that we look at for a loan, for a business loan. So credit score is a part of it, but it's not the main part of it. And the reason why we do it this way is because that way it's completely non-discriminatory. It's when you plug in this number, it doesn't matter what your business does or anything else. It's these different numbers, and then it spits out that small business score number, and that's what we.
So that would be different from, like, say, personal loan?
That's what I was going to
Absolutely, yeah, completely different.
So,
We get that question a lot.
you have no taxes for the business because you start up.
Well,
So we had a
couple
question
more
over
questions
here.
right down here.
Okay, thanks for coming.
A pleasure.
I hear you said that you have different programs, so it kind of relates to his question. So if you're a corporation or LLC or a DBA, what program bracket do you fall into with each one of you? Or is there a program?
We kind of look at them all the same.
Yep.
It's a
Okay.
business is a business.
Yep.
We evaluate that business based on its merits and, again, its ability to repay money that you borrow.
Okay.
Let me ask you a clarifying question, because are you looking for like a product set, or like how a certain business goes into the funnels of banking?
Yes.
Okay, I got you. So I guess from that standpoint, it really depends. I think all of us would go with the thought process that you're dealing with the banker that's sitting in front of you, and you go ahead and have a real, just a personal conversation about business, personal goals, et cetera. What are your needs? What are your wants? And then, kind of building off the comment about the credit score. One of the things I think is that's comforting when I look at my colleagues up here and then just in this community is that most of us are going to be thinking in terms of cash flow first and teaching business owners what that means, okay? When you get into, I've been in banking over 30 years myself, and I don't know how many times, more times than not, that a business owner will say, I ask them a question about, so how you doing? Well, I've got money in my checking account. Okay, right? It's usually a good sign, first of all. But the other part of it, though, you could have all kinds of other bills that you got to pay, and it's gone before. Anyway, y'all get that point. But breaking down whether it's tax returns or business plans, and looking at the cash flow and how does that revenue flow through your company, I think that's the biggest piece. And that also breaks down, even within our organizations, bankers on our teams that really get that. And, being the leader of the business banking team, in kind of northern Indiana and southwest Michigan, I'm all over the place. Yeah, I go to sleep in Granger, but I'm never there. Mr. Summers knows that part. But anyway, probably the bigger piece, though, is that regardless of where our business owners, customers or prospective customers, we go see them, we talk in those terms, and then we figure out how the credit score fits in. It really depends on the overall plan.
Yeah, to add on to that, I mean, I've done a lot of underwriting and, where I'm at in my career, and not to mislead anybody here, I think your personal credit score is a big important factor. I mean, there are other criteria. It's not, when you're going in for a car loan or something like that, you usually have two components, your income and your credit score. So your credit score, obviously, if it's below a certain point, they're just I can't help you. That's kind of the way it goes. Commercial lending, it's a piece of a much larger puzzle. But the newer your business is, if you have a startup business, you're coming with a business plan, and you have a credit history that's got some blemishes on it, that's I think can probably impact things when a banker's looking at it more than, you've got a company that's 15 years old, they're profitable, all this stuff, and oh yeah, you've had a couple credit hiccups. It becomes much less important. This is, coming from my standpoint of how I look at it with new business loans out. Somebody can have a bad credit score because they had some medical issues or some medical collections on there. I think, most people are going to view that differently than, I'm 30 days late on every loan I've had, and I think the way that the score is comprised kind of makes a big difference too. But that is one thing that I think startup businesses have to be aware of. If you have some credit issues, we're asking for personal guarantees. It's going to be a conversation that comes up. It's not a deal killer in every case, but it's an important factor.
We had another question down.
Sure.
For the
I thought.
Didn't you
young woman
use-
had.
No, I was.
You're okay.
Oh, well, then my second question was, if you if any one of us opened up an account with you guys towards that, let's say is in like workforce, how they do, you open up an account. Do you guys have a certain amount of days or that you have to have something going into it before they close it out?
Oh, being dormant or no activity?
Yeah.
Yeah. I think that's part of the way we all end up being inspected by auditors, state, federal, whatever. But we have to do something with it. We can't just sit on an
Yes, sir.
account. So I think that's pretty standard. And really the governing, the insuring body, whether it's for the credit unions or for the banks, like in my case, FDIC, right? So the fees that the FDIC charges for every single account that's open, I mean, at some point, it doesn't matter about the fees so much as what are you sitting on on people's money for?
Right.
It becomes a bigger question we all have to answer to.
Okay, gotcha.
So, yes.
So just to follow up from my questions earlier, there is, this idea out there that a business should be able to get a DMV number, establish business credit, come to you guys at some point, if not you guys, then somebody in the market may or may not give a personal guarantee and walk away with a loan based off the merit of the business itself, specifically talking about corporations and maybe even limited liability companies. But I haven't heard you guys mention anything about DMV or experience business credit score. I mean, it's all seemed very personal at a small business.
We don't hold DMVs. I don't know if you guys still do or not.
We don't.
DMVs, they're not very reliable from the sense that banks aren't obligated or creditors aren't necessarily obligated to report to the DMV. So you could get a score from a DMV, but it might not necessarily be reliable. Banks used to pull them a lot in the past, but I don't know if any of you guys use it. I know we haven't pulled over.
DMV is just the point made. I mean, they're I hate to say it, but kind of a garbage in, garbage out. The information isn't consistent, and it's outside the governing authorities to go ahead and be specific in what's reported and how it's corrected. So the whole Fair Credit Reporting Act.
What about experience, new product for the business sectors? Are you guys
That's
putting
what I
that?
haven't,
Not familiar
came
with
across
that.
that one, yeah.
And we've got access to it. But again, it's just another tool. It's not the only thing that we rely upon. But it goes into a scoring method. But the scoring method is, I think John was touched on that the most. So the credit score for business or personal, those are tools to be used to understand the basic understanding. Does the business owner cash flow? Is there collateral there? First of all, does the business plan make sense? And so for like our bankers, we always, and it goes way back to basic credit trading for all bankers, is that would you be willing to write your own personal check for that loan request? Now all of a sudden you start thinking about it in a whole different light, right? And I would think about it in the same way. If you had that pot of gold and somebody came to you with that business plan, would you write a check for that? And, that's just another way to kind of think through the process and make sure that you're really focused on the details. Cross the T's, dot the I's, however you want to say that. But
I mean, I'm
Okay, for me, if I come to either one of your banks and say, well, I have 50 acres, I want to develop a subdivision, and this is the plan, and give you my plan, is that something that with that 50 acres, that should be enough skin in the game to finance it or no?
Well, and it's kind of funny, we do several development loans, and that, we consider that a development loan. So we kind of evaluate it the same way. So during the construction of this subdivision, this development, where's the money going to come from to pay the loan? Because there would be a loan right from the get-go, right? So there's a loan to purchase the property, and there's
Well,
a
no,
loan.
I'm saying if I own this land.
If you already
it's
own
mine,
it.
yeah,
Mhm.
I already got
And you
it.
want to build on it.
Yeah,
So that would take some financing for infrastructure, streets, and those kind of things. So we do quite a few of those development loans. But again, it's kind of the same deal. How are you going to pay that loan back from the get-go? because there won't be any cash coming in until you sell houses or sell lots, so you follow what I'm saying? So we kind of evaluate, do you have cash on hand as a reserve, or are there another business that's gonna pay for this until, you start selling houses, those type of things? So we kind of look at, again, each
So
business.
if I had, say off the bat, say I had 3 clients
Mhm.
that want me to build these homes,
Mhm.
should they be pre-approved for that particular home? And
Pre-approved
then
now, I
come,
think,
or,
is the way to go. You guys are pre-approved, yeah. We used to do speculation a lot, but I think all the banks have kind of gotten away from that, credit
For
unions.
the most part,
Yeah,
yeah.
so having a pre-approved, person that you want to build a home for is key.
I think the big thing, like, that I would ask if I was sitting down with you and having a conversation about that was I'd kind of want to know your background. Is this something that you've done in the past? You have a background in development? Because there's a lot of, you get into these things and there's a whole thing, bunch of things that can come up when you start getting into a project like that. So usually, you own the land, you own the asset, but, maybe that's not your background is, I usually try to encourage you to try to partner with somebody that does have a development background to kind of partner with
about
you on a
30
project.
years of it.
Okay, so that's, yeah. I'm just saying, these are the kind of questions that we sit down and ask.
Right.
is,
Well, the reason I asked is because that's the thing that I want to do.
Okay, sure.
So I'm just asking for me, I don't know what the rest of them want to do,
Sure.
but for me,
I would foresee all of us getting pretty granular with you and your business plan and really digging down and again, what your background is, where the land's at, what's the parcels and streets and really digging down civil engineering and what architecture you're talking with and getting all that information together before we start thinking about a loan proposal.
I think a lot of our jobs, especially with business plans, is to just kind of ask probing questions just to see if you've thought about certain things. Because there's a lot of times we get brought plans or we get brought new business ideas and we'll start saying, well, what about this, this, or this? And like, oh, I had thought about this or that. And so, the more responses you have to those kind of probing questions, the more comfortable I think any of us get with a loan. And I think, just seeing that you've done the research and that this isn't your first time doing something like this, and those are the kind of things I think we're all really getting at when we're asking a lot of those questions. Sometimes it can seem pointed or they can seem like they're, we're kind of coming after you, but usually it's just, that's our way of trying to figure out, what the deal's all about, what your level of understanding is, how much research you put into it. I think that's the big thing.
A good lender is going to help you manage that risk.
Absolutely.
I think all of us probably work with clients where, it takes, sometimes months or longer to put some of these deals together because you're working like a partner with your business owner where, well, this doesn't make sense today, here's the things I need to see you work on, what you need to do, and then, they come back and then, you kind of tweak it again, if it doesn't work again, and, it's not a, this isn't gonna work, try down the road, I don't think any of us approach it that way. We're usually gonna send you out the door at least with advice and, what we would need to see to get you where you wanna be.
My first question would be, what's your marketing plan? And just trying to figure it out from there and really to the guy's point. Because how would we structure the loan? Who knows? Let's start with what's your marketing plan? Where is it located? What's your plan in developing the infrastructure to the guy's points? And then just kind of top down. So let's start with that revenue number first and think about how that plays out. Because so often business owners, whether you're just starting out or you could be 10 or 15 years down the road, but market conditions make you change your plan, or you want to diversify into another line of business to supplement, kind of take some of the risk out of those revenue streams. So it really comes down to getting inside your head as far as what you see as that opportunity. How are you going to get paid for what you're doing? And that conversation alone can take 30 minutes, an hour and a half, just trying to figure that piece out and just kind of brainstorming on it. And then from there, once we kind of break through that bullet point list, right? And then you end up coming up with a way to finally structure a loan. But I think, like in that case, a marketing plan is huge. Who you got the property listed with, and architect, how you going to create that revenue? Good stuff. Did we get all your questions answered in that one? That was a nice big old.
Well, no, I got it. I mean,
Okay.
I've been brainstorming it for how many years?
30 years.
You know, but, I mean, I got, 2 marketing points that I'm targeting with it, so.
No, I'd love to talk to you about it. We've all got business cards, so we'll just put those things right out there.
You know, one of the things that, you know, we talked about new businesses starting up, and I think we've all experienced it. For someone who's starting a business, is keeping good financials, and that's why we're excited that you've kind of partnered with SCORE and what they're doing here at the center. Because I don't know how many times that we've all seen a startup business, our business has been around for a year or so, and it comes time for them to sit down and they want to talk to a banker. And their financials aren't in order. So knowing that you guys are working with SCORE is key. That would be my #1 thing right off the top, making sure your financials are in order from the get-go. I've dealt with, there are some businesses, salons and some others, nightclubs, those kind of things, that are a lot of heavy cash businesses. And sometimes they don't record all the cash. And I'm going to be a real life example of a gentleman that approached me and he wanted to refinance his establishment. And he banks with us and get his tax returns, and there's really not enough revenue there to support the loan request that he had. But he says, Kenny, look at my checking account. I got tons of money in there. I'm like, doesn't show up on the tax returns. So if you're going to lie to the federal government, chances are you're probably going to lie to your banker. That's got to be right? So just, again, keeping your finances in order from the get-go, to me, is paramount. Again, that tells me a lot about the character of the person that we're dealing with.
That's a great
that is key. So I know you guys are doing it because you got SCORE in your back pocket, so that's perfect.
I've got just a couple of questions. My name is Willow Wetherall. I direct the Women's Entrepreneurship Initiative at St. Mary's, and there's some graduates on this fun program in the room, so thank you. But just maybe a couple of comments and questions. So there are some terms that you guys have used that I want to make sure are well defined. Like what is collateral, and what are some examples of it, so that people have like something real in their head of what counts and what wouldn't count. D&B, what's that term that was thrown around? I don't know if everybody in the room knows that. I think it would be helpful to speak to CDFIs so that when you guys say no, where does somebody go for a little bit more help? I know some folks come to the Spark program for technical assistance, and I know Brightpoint is in this center now and sometimes can help with that, just that small amount of financing that helps you get your credit back on track or helps you take that incremental next step. And then finally, if you gave a couple real examples of small businesses that you've helped in our community that we might recognize and know, and just give a sense of how that deal was structured. I'd love more information on those topics.
Yeah.
Great question.
We can start with collateral, because I mentioned that a few different times.
John, before you say that, I want to add to that what she's saying. When you talk about collateral, equity, personal guarantee, what percentage of, because the person actually has to have it. If you're making a $150,000 loan, can you actually, does that mean you have to have $150,000 worth of assets, or is it, or what percentage of it? So when you have the personal guarantee, the collateral, the equity, and the revenues, how those things fit together, similar, in relationship to the question that she just asked. Because some people don't understand collateral, or if you've got equity, or if you've got, personal guarantee, is that collateral? Is that what are you really talking about that?
Sure. So with collateral, so one of the best collaterals is real estate. If you are a business and we're looking at collateralizing a loan, if you own the building that your business is in, that's fantastic. That's a great way to collateralize a loan. So collateral is just an asset that we're going to loan against. So every type of business, there's a different loan amount that we'll do per the collateral. So we call it loan to value of what that asset is. So for real estate, if it's an owner-occupied business, we're going to give a higher loan to value loan. So if the value is $100,000, we can loan up to, say, $90,000 for an owner-occupied business for that collateral. So just when you start thinking about a loan and collateral, the collateral could be equipment, it could be an asset, it could be accounts receivable, It's just something that's gonna back up that loan. If the loan goes into default, we have something then that mitigates our risk that we can fall back on to collect on collateral if we had to.
Could you go over some more examples? Like, for example, I got a small business loan, they asked me to title my car. That was one of them. You mentioned real estate. What are some other, like with my couch and my furniture in my house?
Well, it's like he was talking about a contract. We can lend money based on, or what we call a receivable. You're going to get this money because you provided a service. They're just taking time to pay you.
Yeah.
We consider that a receivable, and we can lend money against that. That's generally what we call asset-based lending. And again, it's at a certain loan to value of that. So if this company could owe your business $100,000, we discount that a little bit in case they're late or what have you, and maybe say we'll lend 75% of that. So we'll lend you $75,000 based on that $100,000 receivable.
Yeah.
To your question, though, like your personal property, like your furniture, your TV, that kind of stuff, that stuff really isn't considered in there. There's really, so personal property, things that you own, like your house or your car, those are about the only thing that a bank is typically gonna use as collateral, because it's, you know, you can take a mortgage on a piece of real estate, you can hold the title of a car, but you really can't secure a couch or personal property. So those kind of things really just kind of ignored for the most part.
I did have a person put PlayStation 4 on his personal financial statement.
What about high value things? And I was asking that question just to facetiously kind of get more spectrum, but what about things like jewelry and valuables that maybe have a better definition of what their market value is?
If it's insured, I mean, possibly we can look at it.
The problem becomes is, you know, if I hold a title to a car, or I hold a mortgage on your property, you can't just sell that piece of property or that collateral without the bank knowing about it. If it's high value jewelry or something like that, there's really no way to track it unless, you know, the bank found some way to physically hold it in a safety deposit box or something.
With an appraisal on it. And,
right.
But you didn't finish answering. She had some other points.
Well, I mean, I'd love to know some deals that you've done in our community, ones that you can point to. Maybe there's, I don't know, you know, or have some folks in the room describe like a deal that they need or
For
want.
us,
Maybe
actually,
with a little bit more
a bit of a
detail.
confidentiality issue for us to specifically talk about. I mean, everything we do is confidential, so.
Well, give us, you don't have to give the name of the business, but like what would, like a $10,000 loan, what did it look like? What was the deal? Like what was the collateral that was used?
So I'll just jump right in. So from a collateral standpoint, a $10,000 loan, not likely. In putting anything up, it's going to be unsecured with personal guarantee of the owner. From the standpoint of basically to go ahead and get a car, collect on a car, there's a lot of different things that go into the cost of it. It's just, it gets really tough. It's just tough. I know you're being facetious to a point there when you're talking about like couches and sometimes jewelry, but that when business isn't doing well and it's up to time to collect on collateral, generally speaking, that's not around anymore. So it's, let's just call it what it is. It's unsecured loan. We're going to focus at it from an unsecured loan standpoint.
You still didn't answer that personal. What is a personal guarantee?
I can answer that. So a personal guarantee is one where you actually sign that you will make good on that indebtedness, whatever loan that you're signing on. So from the personal guarantee, there's all kinds of legalese that goes with it, but it's basically holding you in some way, shape, or form obligated to pay it. And if not, then you will end up with a mark in your credit report.
That's an unsecured loan.
Pardon me?
It's the same as an unsecured loan.
Pretty much. Yeah, but a personal guarantee, to Pastor Blake's point, generally speaking, it's going to be involved in any business loan to the same extent that on a personal side. It's your good, good reputation that you're going to make good on. And that's basically what it comes down to.
Yeah, go ahead, sir.
So, kind of like what goes with him, so say the same thing as he's talking about, but then you come with a lump sum of cash from like doing a fundraiser. So like for me, I have a staffing agency, which transitioned into home care, health care. So a certain amount of money, and then I came into that with you guys, and that is already running, and I came to ask for something better to now establish a community. how do you guys go about that? Does that fall within collateral of me already having, or where does that go? Does that me bringing my money into already what I have and you guys matching it? Or where does it fall?
Okay. You guys have that one or not?
Well, so we can do, so you're saying you have cash, you're bringing cash to the bank, you're depositing it in your account, your business account, and then you want to get a loan. And you want to know how does that cash, does that flow into the loan at all? Is it?
Yeah, if I already have a business already established and I'm getting cash flow and it's already flowing into the bank, you guys are seeing it already. And I ask for something bigger because now I want to expand into a community. So kind of like how you said, Key Bank does retail,
I
does
think what she
real
was
estate.
saying is, she already have an established business. She wants to expand, so she wants to buy this building so that she can expand with her daycare here.
So
instead of being
in that
at
case,
the house.
the new building would serve as the collateral. You don't have to have the collateral to do the loan. If you're buying a vehicle or a piece of equipment or a building, that new purchase secures the loan.
No, I think the other piece of that too, right? So if you have an established business, that business can also be a guarantor on the loan also. So we do that a lot, where you have the established business. As a matter of fact, I'm working with a gentleman right now who has an established business. He wants to start something that's kind of outside of his realm. So we're going to ask that established business to guarantee the loan along with him personally also. So again, strengthening the deal because it's something new for him. In a lot of times we do unsecured and secured personal guarantees, meaning the majority of the ones we do are generally unsecured personal guarantees. Just basically you're signing that you back this loan, and if it goes bad, I'm going to personally make good on that loan. If it's secured, meaning you've tied a piece of asset, a house or some other valuable to that security of that guarantee, but those are few and far between for us at least, the secured guarantee part of it.
I have a question. The unsecured loan, say for 10,000, does the person's credit score play anywhere into that, or okay, does?
For unsecured loan, that we're all going to be more stringent on that. We're going to look very much at your personal finances and the business, and if the business can't pay this loan back, can you pay it back for an unsecured loan? So we're pretty strict on those.
Okay.
So going back to that very point, then Pastor Blake's question too about personal guarantees. So let's think about that. So in combining ideas here, maybe Willow, to your point, and building a kind of a case study. So because we can't talk enough about details, we'll end up getting
Somebody's gonna get mad. Up a case study, but I think that's the easiest way for people to understand like how that relates to their situation, is to kind of see
Well,
holistically
think
what
about
their
this.
loan is.
Most of the established small businesses in this area have got a loan through us. You know, one of these banks are here to get that business going. Most small businesses have some type of loan right now from a financial institution to help them continue their business.
So let me go ahead and get to the kind of the structure of the loan. I can't help myself but talk with my hands. I'm going to stand up. My colleagues at the bank know how you do this. So look out, guys. But take off my jacket too. No, but when you look at the business, this thing, right? This is the borrower. Okay. The personal guarantee comes in by the owners generally, or an investor. But let's just stick with the owner. And the owner is another borrower. Okay, if you really think about it. So together, this is where the cash flow comes from and where it goes to. So when you look at borrower, co-borrowers, like Mr. Bird's point here, now it all kind of gets into one big old ball. Okay, all right. So then, because the owner's running the day-to-day, that's why the personal guarantee comes into the business that is the ultimate borrower. Okay. And then from a collateral standpoint, what does that business use to run the business? So it could be inventory, it could be receivables. One of my guys here talked about that, which is just a promise to pay, right? It could be fixed assets like equipment, a building, a vehicle. So when you look at the whole span of all the different elements that go into a business, it can move really fast. And what really comes into play, so that business run by that entrepreneur is doing great things, generating cash flow, and just growing the revenue and hiring people, et cetera, et cetera. And then the collateral could be, you know, just what I mentioned. But all of a sudden, and this is where the personal guarantee comes into play, is that if it starts slowing down, there's a hiccup, I mean, there's so many things that can happen with the entrepreneur's venture, that all of a sudden, that vehicle that's part of the loan doesn't have money, you don't have money to fix it, so it's not worth much anymore, because it's just sitting in the lot next to the building, you know, and the receivables, people aren't owing you the money to go ahead and pay for things that they, you know, you're just not generating enough. So then it still comes down to the business owner standing up, finding a way to go ahead and take care of that obligation. And that's where, from our standpoint, we don't, we're not the investor in the business per se. You are. You're the equity. That's what you end up earning over time, right? Building the net worth of that business, so hopefully one day, if you choose to, sell it, retire, whatever you want to do. But the other piece that comes in, and I think the equity I think it was a combination of Willow and Pastor Blake asking about equity is one of those things. So an equity investor is going to be somebody that's got nothing to do with a bank loan. And it goes back to that personal check. You, as a business owner, you're already putting sweat into it. Maybe you've saved up for it. That's your equity in that business. Now you can come to, we'll just pick on all of us, I'm going to include you, Mr. Summers. But you can come and get, say you need 50 grand to go ahead and set up a business. It's just a nice number, it's 10,000 a piece. So we're writing a check, putting in your business. Now you're going to feel obligated one way or another if we're taking out our own personal funds from our family and writing you a check, right? That's an equity injection, okay? So that would be the difference in that case as far as you know, equity versus bank loan. In many businesses, you know, and John mentioned that we're all, you know, have a lot of loans out to different folks, but I would say that amazingly enough, there's so many entrepreneurs in this great country of ours that only, you know, 2 out of 5 really use debt, up to about $5 million in annual revenues. So we see a lot of them because we're bankers. Everybody thinks about going to the bank, right? But you'd be surprised how many folks just, what I refer to as bootstrapping. It's like tie those boots tight and go to work. It's bootstrapping in my mind. So when you're doing that, that's when, you know, those are those 3 businesses out of 5 that are just getting it done and meeting it, you know, working hard for their customers, receive cash, pay their people, pay whatever, and just keep, and then it just grows by word of mouth, right? So with it, I covered a lot of stuff real fast on that.
Especially with your hands.
Yeah, no.
I understand way more after you talk about your hands.
I'd like to talk more about equity as well. So that's usually a hard topic that comes up anytime we sit down with a prospective borrower. So most loans, there's going to be a cash injection from the owner. And it could be 10%, 15%, 20%, even more depending on what the business is and what the collateral is. So most people that come, especially startups, they come to us and they say, hey, I need $150,000 for a loan. And one of our questions is, well, how much do you have to bring to the table? Well, I don't have anything. I was hoping for 100% financing. That rarely happens. And that's the thing. We want to make sure that you business owners have skin in the game and that you've got an equity injection that you're ready. So, and that's one way to mitigate some of that extra expense on your end is partnering with the SBA, and I know that's one thing James wanted to talk about. So that's another avenue that we can look at, especially for startups, is partnering with a local BDC and looking at an SBA loan, because then we can look at maybe a 10% cash injection on your end, or 20%, depending on what the 7A or 504. So typically though, a small business owner, when you're looking for a loan, make sure you've got a cash reserve. Make sure you got cash, an equity injection for the loan, and then a cash reserve for, you know, operating expenses until that business has got a good revenue source. So we want to make sure that you have, you know, skin in the game on your end as well.
Do you ever make loans to pay debt?
Like a consolidation loan? Is that what you mean?
That may be one kind, but I mean, if you're saying, well, I've got, debt that I owe in addition to what I need to expand, or.
Oh, yeah. I love paying these guys off. I'll do a loan and pay these
Vice
guys.
versa.
Well, recent example, I just did a loan for a salon in town, and she had a ton of credit card debt. And the collateral was a building next to the salon that she was refinancing from another bank, and she had extra equity there that we were able to use, that basically a cash out, that then we took that money and directly paid the credit cards off for her. So yeah, and that helps her loan when we're looking at the cash flow analysis, because what we do is a global cash flow, and we look at your personal debt and can you pay off the loan at the same time of paying your current debt commitments. And if there's extra equity in that collateral that we can take out to pay down those other debts, that just increases your loan ability to get that loan and your SBSS score ultimately.
So one more question. So say that you don't really have credit built up enough, like your credit score is fair, but it's, it's stinking because of school. That's all that's on there completely, nothing else. How do you range on that? Is that another debt within itself?
Well, so just like these guys are talking about, is that it's when we're looking at your personal credit score, if you can tell us that story of, hey, you know what, I got hit by medical, or my student loans are insane and I'm working to pay them off, we can explain that to our underwriters, and we can put that in our credit write-up, and that makes a difference, as opposed to when you're applying for a home loan. They look at that minimum score and like, nope, you're below it, we're not touching you. But for us, we look at it and, well, there's a story there, and we can explain that. And, oh, well, you're only paying $400 a month, and that for your student loans, and that is not really going to impact, paying our loan back.
What if it's in deferment and you're still in school, but you got a business?
Again, it's part of that
Same
story.
thing? Okay.
Yeah, and it's the relationship. There's a lot of lenders and banks. They're order takers, and they don't care about the story. They just look at the numbers, and if you fit in that box, they push it off to the side and they move on.
Okay.
Where you've got 4 bankers here that are completely committed to this community, and our banks are as well, that we care about you and the relationship with you, where we're going to sit down and listen and understand what that story is. We're going to write that up in our credit memos, and that's going to make a difference when it's moving down the line for getting it approved.
And I would agree. We talked about relationships a lot. If you meet a banker and they're not willing to meet you at your place of business, to me that's an issue. I want to come see what you do, show me your world. And that's 99% of the time, I'm on the first call, I'm going to come see you. You don't have to come see me, I'm going to come see you. Because that way you get a really good idea. Again, I'm big into relationships, I think we all are. And that's the way to start a relationship. Show me your business.
I got a question back here.
Yes.
Oh, okay.
Yes, thanks guys for coming, really appreciate. It's ironic, I see you guys, but I don't see my banker up there, so.
Well, there you go.
I'm sorry?
Well, there you go.
At least you know who your banker is.
Well, I'm happy with them. I'm sorry they weren't represented. But here's why let's say I did, someone were to develop a business plan and put all the proper things together and come to you guys. Is there a requirement? I know that with credit unions normally, and I might be just talking to simple members, you have to put in some money, buy a share or something of that nature.
Correct.
And if let's say I wanted to say go and get a loan, will I have to become a member? 2, is there a length of, you have to be here for a certain length in order to get the loan or even apply for the loan? You kind of understand what I'm saying?
Yes, absolutely.
And I have one other question to follow up on that, but That was the beginning.
For us at Notre Dame, I don't know what TCU is, but yes, you do have to become a member to purchase a share. For us, it's a $5 minimum in a savings account. It's nothing, it's not a big hurdle to overcome. And there's also no length of membership requirement. A lot of times we're opening your membership simultaneously for working on a loan request. So you don't have to be a member for 6 months, a year, anything like that. It's just, most of the time when I'm closing a loan, if it's a new member, a lot of times I'm opening the membership the day of or the day before. It just depends. So there's no requirements there. For Notre Dame and TCU.
Same with us. You have to become, that $5 is buying a share of TCU ownership.
So what I'm hearing, especially from Notre Dame, just what I'm hearing, if I were to come to you and say, hey, here's the $5 and here's my share, then that same day I can make a presentation on the loan. Is that what I'm hearing you say?
Well, you can request a loan without being a member. You don't have to be a member to
Okay.
apply for a loan. You have to be a member to actually close on a loan, to actually sign the paperwork.
So
get the
you
money,
have to be a
yes.
member.
Yeah, but you don't.
Okay.
You could walk in there and say, hey, I want to talk to somebody about a car loan. I want to apply for a car loan without being a member.
Okay.
Just before we sign documentation, we'd have to establish the membership essentially at the same time. So we will talk to you about a loan without you being a member. That's, yeah.
But, and it is clear as far as a business, we're talking business loan, not personal loan.
Either or.
Either or.
Either or.
What about the other two?
For banks, we don't have memberships.
Right.
Okay. And also, there's no requirement, there's no limit, you have to be,
Nope.
Not directly, no. From my standpoint, we don't have memberships at PNC. We've got customer relationships. So when we look at it from that direction, we'll just have that conversation we were talking about and identify needs, wants, customer relationships, vendors, et cetera, et cetera. You got a paper in front of you. But from there, then we'll break down what type of account makes sense based on other things that you tie into. And the best experts are the 4 folks that came along with me. Santiago by the door there, and then the 3 folks right here that can get right into the nuances of it. And I personally hate it when our team goes ahead and starts talking about fees. I mean, everything's going to cost something at some point based on something. Okay, let's get all the somethings and thumpings out of the way. Let's just talk about what's going on with the business relationship and how do we go ahead and maximize that. So that's why I wanted to throw that in there, because the concept of fees to have this and that, which none of us do, I think it's more of a technicality with the credit unions to have a share in the credit union, because that's how they're organized. Yeah. Fair? I didn't mistake something.
I have one more.
Yeah.
This last one.
Yeah, write them down.
Okay, the last 20 minutes.
This is real quick. You spoke of a metric that you guys use to determine, you said not necessarily credit rating, but you gave some other metrics. Is that something that me as a person I can actually look up, study, and have the answer for myself before I even walk in the door?
No, I think every bank kind of looks at things just a little bit differently. And every deal with a business can be completely different than the next. It's rare that 2 look exactly the same. So, I mean, there are some kind of guidelines. I think John threw out the metrics I think you might be referring to, but there's really no research you can do on that, because it's specific between the different organizations.
One difference I would suggest is what does cash flow mean?
Right.
So when you look at cash flow, you can go ahead and just think about how money comes into a business and how it moves around and it comes down to the bottom line, right? So you have revenue, we all know what that is. Without that, we don't have a business. And then you have the expenses, you have net profit after everything's paid for, and then somewhere in there the tax man gets some of it. That's a good thing, because that means you're profitable. So that's okay, you pay taxes. But then after that, what is available for debt repayment and for expansion, to your point, when you're talking about adding staff or buildings or whatever else. If that bottom line is growing, then you're able to go ahead and reinvest, continue to invest in your business, because then you see that basically in your checking account, right? So, to get into a more detailed conversation around cash flow, all of us would end up having to look at financial statements and really break it down based on the complexity or not, no complexity, and it really changes. Santiago has done a fantastic job in so many different opportunities, kind of going back to your point, Willow. The guy that's been part of We and Spark, et cetera, so I had to make sure I got him into the conversation back there. But when we look at different projects around town and how we approach it, another homegrown guy with Santiago and knows what's going on, who's who in the community, et cetera, being able to really figure out those different transactions and actually, to your point, Willow, to go ahead and break down everything for each individual. So hopefully that's a transition.
And Santiago makes very good barbecue, just in case anybody.
Well, I got several questions. As far as a business loan versus a personal loan, we're gonna go back to the loan. If the amount is lower, like in the 10,000 bracket or a little, in that area, you said potentially you might need to do a personal loan versus a business loan. My question is, what's the difference in rates versus going personal loan versus business loan? How do you know, as you being the bankers, how do you know at that point, would it be more, would it be better for me to do business loan or would it be better to do a personal loan because of the terms, the length, and the percentage? That's my first question.
From our standpoint, it's the same thing.
Same thing.
The rates and the terms are all the same. That's why we think of it in that terms. First, PNC looks at as I mentioned, unsecured loan, and around 10 grand or and even above that, because just the structure of it and everything else is pretty much the same as what you see there. And when you actually get into other loans that actually have collateral against them, then that becomes something that brings the rate down.
Okay.
Because there's some kind of hard collateral. And that's the concept,
Yeah, I think
give or take a few points.
Unsecured is going to be more expensive to do versus a business loan, all the way around, for everybody.
Yeah, but if, for example, we go through this a lot with startup businesses that might not necessarily, have all the pieces in place to do a business loan. But if you have equity in your house, well, we can do a home equity loan for you, and that's going to be a lot quicker, a lot cheaper. Notre Dame, we eat a lot of the fees too, so we're going to cover appraisal costs, those kind of things. So
And it's a longer fixed rate too.
right. So if you have equity in your house, that's usually the first avenue we're going to look at, especially with startup business. I don't know if anybody here is familiar with the SBA or how those products work, but one of the first things they're going to make you do with the SBA loan anyways is pledge your home. If you have equity in your home, they're going to make you pledge any personal and business assets. So if you already have equity in your house and that's sufficient to get the loan you need, well, you may want to explore a home equity loan because it's going to be a lot less hoops to jump through. It's going to be a quicker process, a little less stringent than dealing with an SBA loan.
So with that being said, how long can you use your home equity loan to, once you gain the relationship? And is there a time frame when you say, well, you know what, you've been good, we see the business is growing,
That's a good
we
question.
can just separate it?
That's a really good
Yeah,
question.
yeah. It depends, I think, on the business. But yeah, definitely, once we can show a historical track record that things can support future loans, that makes a lot of difference to me as a banker versus saying, here's a theoretical idea on a business plan, here's what I think I can do versus saying, here's what I've actually done. It makes a big difference to a bank going in with, here's actual historical records of what I did. So yeah, I definitely, if you get away with that home equity for a couple of years and you want the business to stand on its own, it's a lot easier if there's a historical record there.
Because I know with the LLC, you got that fine line there to keep the business. So starting off, it'd probably be feasible just to do the home ec, and then after, like you said, a couple of years.
Or even a year. If you can show good growth in a year, one solid year of revenue on your tax return, we can start looking at what the potential of that business is. Start getting some projections for a couple of years out, and then we can make a loan off that.
I'd say from PNC standpoint, we actually do a business equity line. So we would actually set it up in the business name. So if it's an LLC or a sub-S corporation or whatever, however you want to set it up, we can give the loan, the borrower is going to be the LLC or whatever that entity is, but it's still your personal guarantee. And kind of going to a concept we talked about is that the equity in your home ends up collateralizing everything. So it's an equity line that you can borrow, pay down, whatever, just like any other line of credit. Going back to the SBA, I do want to go ahead and touch on that real quick. And I would say that as a point of differentiation, you need to understand that there's a lot of different programs out there that can support in kind of a quasi-equity debt situation. The SBA is somebody that comes into play in a guarantee situation. Okay?
Small Business Administration.
Yeah, so that's where I was going to go. So SBA, Small Business Administration. Now there's other entities, USDA, that comes into play, and other alphabet soup, right? But the one that really comes into play the most often and people hear about in the media also talks about is the SBA, Small Business Administration. There's so many programs that are available through the SBA. And, from PNC, we're a preferred lender, so when we're underwriting it, it's at the same time. We don't have to go somewhere else to get somebody else to underwrite it afterwards. So that we're underwriting to the SBA standards, and what we do is if it hits all the criteria, then we just basically put an account number on that loan with the SBA program, and that can be pretty nice. And it'll help if there's a collateral shortfall. It'll help with even launching a new business. Getting $150,000 or something like that available for something that has a really good business plan that comes into play. So there's a lot of different avenues to it that you just sit there like, wow. We've all got just a toolbox that's huge behind the scenes, but if we start dumping the concept side, there's like overload, I don't know what, just leave me alone kind of thing. But that's where that needs-based conversation really comes in.
Second question.
Yes, please.
Another question.
Real quick, he talked about being a preferred lender for the SBA. That's a good thing for you as well. When you do come to a bank that's a preferred lender or a credit union that's a preferred lender with the SBA, that can save you money on fees. So we're also a preferred lender with the SBA. So that helps you out because SBA, there's loan fees from the bank and there's loan fees from the SBA. And the SBA can waive those fees if you're a preferred lender. So that's certainly good.
So, it's actually two questions. This one's a quick one. If you get some grants, can you use that as collateral? If you're going for a loan, say for instance, the grant is only for the help with maybe the inner workings, and you needed, say, the loan for your building, or whatever the case may be. Can you use the grant as collateral? Because that's where the income's gonna come in once you start.
We look at that more as a repayment source than a direct source of collateral. There's really not a way to secure a grant. And a lot of those grants are performance-based, so if something happens and the work doesn't get completed, a lot of times those grants don't get funded. So.
And then the last part of my question is, if, I'll use an example, if you want to buy, say, a duplex, and it's rented out, and it has a 2-year lease contract already on it, and you come to the bank and want to get a loan for that to start into your business, what type of collateral, or would you still need to have your 20% down, or would you put it under business, or would you do it under mortgage, or how would you structure something like that as an example?
So the duplex loan, as I'm understanding your question, that would be more, generally what we would do is introduce you to one of our mortgage loan originators, and it would be directly on an obligation to you, or and in some cases an LLC or something like that. But generally speaking, we'd be underwriting to the secondary market, Fannie and Freddie Mac.
Okay, but we still can come to you, if you're our bankers, we can still come to you with something like that, and you just.
Oh, absolutely.
Yeah, we're one of the few banks that actually looks at investment real estate.
Okay.
It's kind of a weird market, and a lot of banks, especially after the big crisis that happened in '08, a lot of credit unions and banks, they're scared of them, and we are too. So, but we'll still look at them, and we can do it in the business name. One of our biggest criteria is that you have to be local. That if we're going to look at investment real estate, we don't want you, calling from Chicago wanting to invest in South Bend. We want to deal with somebody from South Bend that's looking to invest in South Bend.
We get a lot of calls from California, all over.
Oh, all the time, daily.
Well, because you can buy a property in South Bend for $50,000 that would cost $350,000 out there, and so they're.
No, born and raised.
Yeah, we don't want them, we want
Real quick question. If a business has put in a bid for, say, a city contract, okay, and they win the bid, okay, but they're not going to get paid until the work is done and it's 90 days from now, okay, is the value of the project considered able to be used as any sort of collateral or anything in order to be able to get a line of credit or some funding in order to be able to buy the materials and all the things that are necessary in order to be able to fulfill the contract?
Absolutely.
Yeah, it sort of becomes an account receivable at a certain point, so then, yeah, you can secure to the general.
I want to look at a business like that tomorrow, that has some government contracts.
So, and I always look at the fundamentals of the business stuff, but I guess the consensus is yes, all right? So, looking at the fundamentals of the business, what do they do? What's the business doing? What is their value add? What's the potential of having other contracts? So, just one contract does not make a business. So that's the piece that, individually on a transaction basis, probably, maybe, I don't know. But what's the rest of the plan? Are you going to do this multiple times? Are you going to have multiple contracts? What's your plan to make sure you're getting multiple contracts? One and done, it better be sweet and have a lot of margin, like a lottery ticket.
Yeah.
But most folks, you just don't, most projects don't have, that kind of net in them. So what are you doing next time? If it's 90 days, okay, great. When's your next one? Because you want to ladder those out, right? So you're always collecting on something, and at some point, it just turns into, we don't need to collateralize it with any kind of.
Yeah, that's a good point. It goes back to relationship, right? Understanding that business. I looked at a business just recently where they were doing some huge contracts, doing some pavement and those kind of things. But when we dug a little deeper, why they were getting all the bids is because they were cheaper than everybody else. But if you're cheaper than anybody else, you still have costs. You have to buy the concrete and whatever it is. So it turned out that they weren't charging enough and really weren't making a lot of money. They were busy in bringing in tons of money, tons of cash flow, but not to the bottom line. Again, so that's, again, a hard discussion that you have with that person to say, you're not charging enough. So it makes it hard for us to really give you a good evaluation because there's really not a lot of money funneling to the bottom line. So we run into that quite a bit.
But that's a good thing to know.
Mm-hmm.
Absolutely. I understand that. They're like, oh, I got a bunch of money. So this doesn't have to be like a negative experience. It's like, wow, I learned something.
Absolutely. One of the things we see a lot too, we talk about understanding your business. Someone will want to borrow money because they think, if I can just build more, I'll make more money, right? If they're building widgets. And that's not always the case because a lot of times there's a lot of cost that goes along with building more, right? You got more employee costs, you got additional machinery, and all those kind of things that really kind of, again, go into the bottom line. So higher utility costs. And so all those things you have to factor in when it comes to building things and making more. So more is not always better.
So it's almost like you're getting free business consultation when you come into
we would hope so.
look at a loan.
If you're not at the right bank, right? Guaranteed.
One of my, she asked a good story. One of my favorite stories, and it didn't happen while I was at TCU. I was with another institution.
Not ours.
Yeah.
I love that team, but
there was a small business here locally that repaired robots. And he had a lot of bankers come through, but nobody really took the time to understand his business. And I'm a technology nut, and I thought it was cool that this guy is repairing these robots for the automotive industry. So we really hit it off right off the bat, because I'm talking devices and things like that and technology, and he was like, oh yeah, I got this and this. And so we had a relationship before we even started talking business, and I think that helps. And so we did a loan for him to purchase another robot repair business out of Texas, and it came together for him. And when first showed up at this guy's business, he probably had 8 cars in his parking lot. Well, that was with another institution, so I tried to call on that guy since I've been at TCU. He's ingrained in where he is now, but his parking lot was overflowing with cars. He didn't have enough space to fit all the employees he had, so his business had grown that much in just 4 or 5 years. So that's exciting for us. I mean, that's why I do. That's why I get up every morning to have those kind of. And we do a lot of loans for big corporations where you don't really even talk with the business owner. You're talking with their CFO or their financial person, their accountant, and so you really don't get a chance. And so those are not as fulfilling to me. The more fulfilling deals are the small business loans to help somebody get up and running. They're doing their first loan. I did a loan for another local business. Again, he had grown organically. Never borrowed money, but he was getting so big now he needed a machine that would just kind of escalate. He had outsourced getting these labels put on some cans. So he finally needed a loan. But this guy had been in business for 7 years, so it was a pretty easy deal for us. Plenty of cash flow, he just never had a need to borrow money. He built it all accordingly. Had a couple small investors in the beginning, but just, again, built it without loans. Just took his time and grew and grew and grew.
That's my next thing was, I see you guys are big fans of Dave Ramsey, huh?
Yes and no. We do like that.
Yeah, he doesn't believe in debt, so without debt.
So it's a relative thing.
So, I was just going to say, just listening to Kenny talk, you hear the excitement when he talks about doing loans, and that we all share. And when you find the right business banker, and that's what we're all here for, is how do you find the right business banker? Find somebody that really is excited about you personally and your business. And if you don't hear that excitement, and you don't hear if they're not asking questions and really engaging you, move on. Because, I can tell you, there's nothing better and more exciting than watching a business grow. And especially when you were there day one and helping the foundation of that business, and you were the trusted advisor in that relationship, and years down the line, you're still there, and you're still checking in with them all the time, and you're watching that business succeed, and you're seeing them build wealth, and you're seeing your clients happy, and they're hiring folks from the community. It just makes all the difference in the world, and I know that's why we do it. So if your banker isn't that type of person, move on. Find somebody that cares and is excited about what you're doing, what the community's doing, and just build that relationship.
Okay. Well said.
Question?
Which one are you passionate about real estate?
Depends on what kind. But we'll say yes, right? Yeah.
Real estate is easier, right? It's easier to collateralize. It's just an easier.
You're making it hard on us there.
No,
Now we got many more.
Hey, that's good for you.
Mike's got the fancier handout, so I'm just going to say.
I think we just put them all on hold.
But that's what we want, and every bank does it a little bit differently, and we all have different qualifiers and everything else. So you want to do your due diligence when you're thinking about what bank do I want to finally partner with. Meet with a lot of different banks and a lot of different lenders. Find out what the process looks like. Find out, do you mesh well with that lender, and ultimately, are you going to have a good partnership? And then choose. Don't. We all do great stuff, and we all do it well because we care. And we're passionate about it. But you want to make sure that we check your boxes. And that's the thing, is that it can be very intimidating walking into a bank, and especially when you're asking for a loan. You feel like it's overwhelming, and am I going to ask the right questions? And what if they ask me a question I don't know? I'm going to look like an idiot. That's not the case at all. We work for you. You got to remember that when you walk into a bank, the mentality should be, you're working for me, and what offer do you have for me as a business owner? And I should be working to get your business.
There's a lot of times we're just as intimidated as you are.
Oh, guaranteed. Because we want to make sure we're answering questions the right way, and that if we don't know, that we get you the right answers. And it can be intimidating on both ends of the table. So, because we want to be that trusted advisor. But just remember, when you're choosing your business banker, when you're sitting across that desk, or they're in your office, you hold all the chips, you hold the cards, and that we're here to serve you, and that, you know, we're your client too. So remember that. Don't be intimidated when you walk into a banker's office, you know, because we're trying to get your business. You know, it's not the other way around.
That's what an elder told me. She said, I don't beg to pay. I'm not gonna beg you to pay. So, you know, if the services aren't right, I move on.
It's a good way to look at it.
So,
Let me let you ask one last question, and then we're gonna thank you very much, and then let everybody have time to be able to chat.
What I'm looking for, actually I built my own home when I was 26 years old. And when I moved in, I designed it and everything, and had a little construction to build it. But I was passionate about moving in at a young age. And ever since then, I've been wanting to build a subdivision. But my focus right now is on renovating the houses that the city has designated vacant and abandoned.
Sure. Okay.
And I actually have 2 properties right now that I'm self-financing that I'm working on. The last 2 years I've been working in Chicago with my son, and we've done 8 projects from $70,000 to $500,000.
Wow.
And I've been the project manager on all of them. And I'm looking for someone who would be passionate with me in developing South Bend low-income neighborhoods for families with low income. So I'm looking to do houses from $50,000 to $100,000 for people who are renting right now, but I want to help them to buy their own homes. And so I want to develop the neighborhoods. Actually, one of my projects is down the street. I'm doing one, and there's 3 more developers working across the street from me, renovating houses in this low-income neighborhood. So that's what I want to take.
Sure.
And my specialty is that free labor for the neighbors who's not getting a house to fix up their yard, so the whole neighborhood can.
It's awesome.
That leads us to a good point that was on your list, CRA, Community Reinvestment Act. Credit unions are non-for-profit, so that's something that we don't necessarily have to play in that water, so to speak. You guys do, right? Right.
Which is a good thing.
It is a very good thing, right? Because it forces. So we recognize that, and we're going to start investigating and playing in those waters also, so to speak. We borrow money all from what's called the Federal Home Loan Bank. It's a central banking system, and ours is in Indianapolis. I went to a conference just last week on community reinvestment and some of the programs that they have through some of the programs that allows us to lend money in low to moderate income housing areas, that we're going to get our money either cheaper or there's special grants directly to the homeowner in some cases, up to $10,000, $20,000 directly to the homeowner to spark new home ownership. So there's tons of programs out there. We just started investigating tax credits and some other programs that we're working through. I heard you mention CDFI. And so, again, the government agency that allows banks and credit unions to become a part of it and get some funds just for that reason. So.
And just to jump in on that very thing, so we, from the Community Reinvestment Act, that's what CRA stands for. So from a banking perspective, I think that's actually a plus from the standpoint, like in the case of PNC, we have our community development team that actually does loans and equity investments in similar projects. In fact, we've got 2 projects just here in downtown South Bend that we've already invested in. One of them has already been repaid. And so when you look at projects like that, kind of along what I'm picturing by, especially with your smile and pointing back and forth, 50 acres, 100 acres, 100?
We have 2 separate
125?
businesses. He's doing something else. I'm about with her. I'm with the seniors and the vets.
Gotcha.
So we're on the same page.
So I wonder what was going on there. So no, but well, there you go. So on that front, though, the community development team that we have actually sits down, gets to know what your project's all about, and from there figures out whether it's a grant, whether it's an equity play from other investors that we have access to. That's what in that case, what a big bank gets. I mean, we've got other revenue streams and other things we do, and one of them is people that want to invest in real estate with certain parameters, and so we're able to do that, and it gets more complicated with tax exempt status and all kinds of other stuff that helps projects get done. when they normally wouldn't. And so we'd love to talk to y'all, you know, maybe out tonight or take one of our cars, we can get together for coffee sometime and just chat about that.
Yes, sir.
And you said that grant starts off at $10,000 and moves up? Based on, I guess,
There's a particular program through the Federal Home Loan Bank for new home ownership, first-time home buyers.
No. Based on the statement she made to you about redeveloping the community, I heard him say that there's grants available from the bank.
Oh.
I guess given by the federal government, and you guys make grants available depending on the size of my project?
Yeah, grants, those are gonna be in big blocks. We're talking like millions of dollars in that case, and doing a lot of different properties. And so the grants may turn those projects into tax exempt investments. So it gets pretty complicated from that standpoint. It's not gonna be a one project, two project. It's gonna be like right down Washington, to give you a strip. So if you start thinking of a project like that, now there's combinations of grant money that come from different sources, not necessarily the U.S. government programs. But there's a lot of other entities that do grants, and it's basically to get projects done. Then there's equity investors that throw in, literally speaking, invest in the project.
I guess what I'm asking that, since those grants are out there, I'm not aware of them, but the project that I'm doing is community-based as well. If I come to you, you're gonna help me get those grants, that's what I'm asking.
Depends, we'll tell you exactly what size and how it fits, yeah. Because the size of the project, I mean, what you're talking about building a subdivision, that's gonna be a pretty big project. So, it depends. We'd love to talk to you about it and see how it matches up.
Mine is also community investment, but what I was looking at doing was get it home for the seniors.
Okay. I'm gonna, first of all, let's thank these gentlemen for spending all this time. The center's open, okay, so feel free to stick around, have conversations. I just felt like I had you on the fire line after a while. I could give you a break.